Hi, Adam again here, and in this video what I'm going to talk about is the Trader's Edge formula. It's a formula that I created with the trading software which I built. So what is the Trader's Edge formula? Well, it's RPT times TPM times RR times WR, and that equals MR. So what the heck does that mean? Well, at the start of each month, you need to know exactly what percentage return you are going to make on your trading account. Okay, so you're setting yourself up for success from day one. So you need to know what that percentage is. And now, perhaps it might be 10% for the month. Now, if you need to pass a trading challenge, then 10% is always the number that you need to hit to pass that challenge. And you have a limited time to do it, but ideally do it in a month, and then the sooner you can get a live account that you can trade, the better. Okay, so we know what your monthly return needs to be now. So what do you do next? Well, the next thing is risk management, calculating how much risk you are going to have on each trade. So risk per trade. Is it going to be 0.2% of your trading capital? Is it going to be 0.3%? Is it going to be 1%, 2%? And let's just say it's 0.5%. Okay, so we put 0.5% into the Trader's Edge formula simulator, and so that's one of the parameters that we use to do the calculations. Okay. Now, how many days are you going to trade for in the month? That could be 10 days. It could be 12 days, it could be 20 days in the month. So you're scheduling the days that you're going to trade and the times of the day that you're going to trade. So no jumping in as and when, opening up your laptop, looking at the screen and trying to make a trade work for you by looking at the charts. You have to schedule the time out so that it is organised, you're disciplined, and as soon as you get to your trading session, and that could be, say, in the morning or the afternoon, you know exactly what you're going to do, what strategy you're using, and then waiting for the trading setups to happen, and then you execute that trade. All right, so you know how many trades you're going to make per day, how many trading days in the month, and so it may be that you have 2 trades per day, and that's over, say, 15 trading days. So over the month you would make 30 trades in total. Okay, so the next thing you need to do is calculate what your average risk reward is, your average. So say if you did 20 trades, analyze those trades, what's your average return in terms of the reward for the risks that you've taken. So if you risked £500 and your reward was £1,000, you've got a 2-to-1 return there, haven't you? Okay, so that's very important, and you need to know those numbers when you're analysing your trading results. If you're forecasting what potentially you're going to make going forward, which you should do, then you need to know that average risk reward ratio. So finally, what that does is it will tell you, if you did those 40 trades in the month, what is the win rate? Okay, this is so important, because if your average risk reward is 2-to-1, and say on those 40 trades you got 18 winning trades, 22 losing ones, then you'll know what your win rate is, and that will determine the monthly return that you are going to get. So I have two, I don't really like calling them calculators, they're so much more powerful than calculators because it's a whole formula built in. But I have one which is a trading simulator and another one which is the analyzer. The simulator does all the calculations before you trade, and then we punch all the trades into a journal that gives you your average risk reward ratio and your win rates. And then the trading strategy analyzer is, what we're doing is we're punching numbers into that one, and then we are analysing those previous trades so that we know what your win rate has been in the past, what your risk reward ratio on average is, how many trades that you've made in a month, and then we look at that over not just a month, 2 months, 3 months, but over 12 months, 24 months, over whatever time you want, so you can see how your trading account can compound up over a period of time. Why is this so important? Why is it so important? Well, because at the beginning of the month, if you know exactly what you need to make, psychologically, I've done this with so many people, they can't believe it. They sometimes will just jump in and do too many trades and everything is just all over the place. It's so haphazard. And some have said, God, I've done 20 trades, I've got 12 winning ones, I've got 8 losing trades, and I've made 9% for the month. How does that happen? And the reason for that it is so magical is because you only execute low-hanging fruit trades. You're not going to jump in trying to trade absolutely everything in sight, okay, which is a fast way of losing money. Your win rate will be all over the place. It's more than likely that you probably get 30% winning trades, 70% losing trades. You won't have a clue what your average return to risk is on the trade because you're not looking at the numbers. You're just going in haphazard. So this way you can just be very patient, wait for trades to set up for you, and then execute them when you need to. If you only need to do 20 trades in a month and you'll still hit your target, why wouldn't you just do that? I mean, I've got some guys who prefer to do more trades, but they're very selective still, and they might be risking a lesser percentage. So they might not be risking 0.5% per trade, they might be only risking 0.2 or 0.3% per trade, okay? But they still know before they enter a trade, before they measure everything up in terms of the stop loss, the take profit target, and then the entry point, they will still do the numbers. So if they can only risk a maximum of £500 on a trade, and they need to have something like 100 pip stop loss, then the amount that they're going to risk is £5 per point, isn't it? And if they're risking 50 pips, then it's £10 per point. So I have a position sizing calculator, which is great for doing all those calculations very, very quickly, so you know before you go into the trade exactly the amount per point you are going to trade at. And sometimes it can be £5.86 per point, it might be £6.73 per point, okay, because it's all based on the amount that you're going to risk on the trade, and then divide that by the number of pips for your stop loss, okay. So the Trader's Edge formula is so much more than just doing those calculations. It's about psychology, it's about being so patient, you're disciplined, you're focused, you're understanding risk management, you're understanding drawdown and what can happen when things go wrong. You understand about trading losing streaks, so you might get 4 or 5 trades in a row that you lose on. So I have a drawdown protector to show you what that would look like. So I analyse everything, absolutely everything, before going in, because if you don't know the numbers, then you're like a kite flying in a hurricane. That's what you are, a kite flying in a hurricane. You're just blown around all over the place, whereas you just want to just take control and make sure that at the start of every month you know precisely what you need to do. And then when you know that the strategy that you're using, and it might be a couple of strategies, it might be a breakout strategy, it might be a reversal strategy, it might be a momentum strategy. There's so many. It might be a pounce on the bounce strategy. There's so many strategies. There's different time frames. You could be trading a 1 hour time frame. You could be trading a 5-minute time frame. Whatever you feel comfortable with when you trade. And it could be that your trading style just suits you, and this is where the formula works perfectly. It's tailored for every single trading style, okay? It's universal. So whatever strategy you want to use that suits you and your lifestyle, you just dial in the numbers and it will tell you exactly what you need to do, how many trades you need to make per day, per month, exactly how much you put on per trade, what your average risk reward ratio is that you're going for, but we're also going into the past and looking at what it is on average, and then we can tweak that. Maybe it might be you're just letting your trades run for a little bit longer. Maybe you might be ratcheting up that stop loss, so you get to a 2-to-1 return, lock in the profit there, and then keep the trade running if there's lots of momentum and the algorithms are running like crazy. You know, some people say to me, oh well, it's RSI is overbought, it's over 70, and the market still goes up by another 300 pips. Why does that happen? It ignores what the relative strength index indicator is saying. If it wants to keep buying, it will keep buying. If it wants to keep selling, it will keep selling. Yes, it will run out of steam at some point. It will be at overbought or oversold levels. I think continues to keep going up. It will always take a breather. So that's what the Trader's Edge formula is. The calculations, I've wanted to build this for years now. And I finally got round to doing it. So I built all of the software myself as a trader for traders, and it is something that every trader needs. If you go to the description below, there'll be a free trial to the Trader's Edge formula simulator calculator with instructions how to use that. Of course, beautiful day here. So you've got instructions how to use that, which is built into the calculator, and videos how to use that. So there's a 7-day free trial, so make use of that. So there'll be a link in the description below if you want to trial that out. I highly recommend it. Of course I do, because it's my software, but I really do, because if you want to improve your trading, or if you're just starting out and you want to trade properly, then this is the best place to start. I've also got a drawdown guide as well, which I think might be helpful, and I'll drop a link in the description as well. That will help you when looking at what potentially can go wrong. Sounds like I'm a doom and gloom merchant, but I'm not. I just know what can happen. So many people blow up their personal trading accounts, lose challenge after challenge after challenge, and I know that doesn't need to happen. Okay, you just got to understand risk and have a set plan to follow. So this is like a trading plan on steroids, okay, because you've got all the numbers all dialed in, and it creates infinite simulations. So you can, whatever numbers you keep tweaking and changing on there, it would create another simulation. It will tell you what your win rate needs to be, it'll tell you what your risk reward ratio needs to be. I mean, it's just phenomenal. I love it. I play with the calculators all the time, looking at different scenarios. Anyway, that's enough for me. I'm gonna end this now. If you've got any questions, then please leave them in the comments below. I do welcome comments, and if you think the video is all right, then please click the like button. I think it helps or something with the YouTube algorithms, but I don't know too much about that, but that's what I'm told, so that'll be helpful. If you do want to share this video with somebody else, then please do so, and look out for the next video. If you have not subscribed, click the subscribe button, and the bell will tell you when my next video is out. I did do one yesterday, which was a warning about what can go wrong with trading, and this is somebody I know, a friend. He's become a friend who literally sold a business and went from having £2 million to zero, and that was from buying crypto and trading. So that's a harsh lesson, but if you've not seen that video, then watch that. Be on the channel or maybe in the description below. All right, I'll speak to you soon.